Hugo wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at.
All right, Steve. I think we're good.
Good morning.
Good morning. So for those, we'll, I guess, just summarize. Mitch is just away today. He's got some stuff going on with flooding and moves, and it all seems like a lot. But, you know, we wish him the best. I see that we're live. I see that everyone can hear us, and we have a chat. So fantastic. So how's it going, Steve? A good weekend? You all recharged? You ready to take the bull by the horns?
Yes, sir. Yeah, I think so. I'm ready to go. I've been jamming charts all weekend. We all do different things to relax. Not everybody is wired like me, but yeah, I've been getting in Zen mode. A lot of cool stuff to look at, and yeah, looking forward to getting into it.
Awesome. Well, let's just do this. That works. Cool. Look. See, first time. Oh, look at all the cool things I can do here. This is fantastic. So yeah, this is working well. All right. So let's just do a quick sector rundown. Let's see what's going on this morning. I'm just going to update this so it's not year to date, but I want to do change from the close. I was doing, and that's interesting. We may go over that later, is year to date stuff. So oil, right? I don't know if you were looking at the chart of oil, but that's not only up 1.25% today, but it's also breaking what I think, or at a very important kind of zone. So I have this marked, this USO, and pretty, you know, don't need to be a CMT, pretty obvious to see kind of what's going on here with the consolidation. This chart goes back all the way till June 2022, people. So we have not moved in oil really in any way, shape, or form for 2 years plus. So 2.5, I guess now. So we're not only breaking this, but I wanted to highlight this zone right here. Right? Massive area of resistance, call it from 81 to 83 and a half in oil. And we had a nice move yesterday. If I turn on the pre-market action, you can see that we tried to challenge that. We got as high as 82 and a bit, and then we sold off. So oil and oil stocks, what do you think today, Steve? They're looking pretty interesting.
Oh, absolutely. Yeah. So we've got a couple things that I think are making it interesting for the first time in quite a while. The first is pretty obvious on the screens there. It did the thing, right? We had the pretty obvious downtrend line after months and months of consolidation. Finally kind of did the peekaboo look over there. So from a technical analysis standpoint, you know, sometimes it helps to get into the weeds. Sometimes simple lines are all you really need to some extent. So that's one reason that it's on my list. A lot of the leading names that I've been watching are in energy for the first time, or whether they're natural gas or whether they're oil, like we're talking about here, which seems to kind of be the laggard in the overall energy sector. So it's something I'm definitely keeping an eye on. I'm also just watching the general trend of money coming out of tech in general, and just where is it going to go. So this kind of fits in the theme with kind of looking for areas where the money can slosh into to kind of keep the party going, so to speak. So
yeah, and this is something we see a lot in January, where me and Mitch, and I believe you were on as well, we were talking about this, where, you know, if I'm sitting on a massive gain in something like Nvidia, like massive, right, doubled, tripled, whatever, and I'm a giant hedge fund, and if I sell it in December, I got to pay that year millions and millions of dollars in tax. So why wouldn't I just kick that can down the road a little bit just by waiting a week? You know, if it's the end of December and we saw that tech started to get weak a little bit here, it's like, yeah, I could sell it, but if I just boot that can down the road just a little bit, then I don't have to worry about doing that. I don't have to worry about worrying about that until next year. Maybe I'll have a bunch of losses against it or whatever. So people will sell the winners quite often in the beginning of the year, and then they buy something, right? And part of our jobs as traders and investors and all that is to try to figure out what that next thing is. So we have the Qs that not only is down, so this candle includes the pre-market action, this daily candle, not only below this support right here, but you can see it got below the support. It tried to retake it sometime in the pre-market and then failed miserably. So that to me is not a good sign. If we're hanging out under this level, then it's, I think all bets are off for now, right? We've got to kind of pay attention to maybe a little bit more of the short side. Same with the S&P 500, right? Yes,
Yeah.
I've drawn these out on the weekend just to try to calm everyone down, but these are all the bull market pullbacks of 5, 6, 10% that just kind of happen. Now we're sitting at about 5% down. So it's not the end of the world, but this is, to me, this 580. That's the line in the sand. We got to retake 580. If we do it today with force, then I think I'm going to be a pretty aggressive buyer. If we don't, if we close and we hang out under here for a period of time, I think I'm going to take a little bit of a step back. Do you agree with that? Is there anything that you're looking at from, I know you look at Wyckoff and all of this for tops and bottoms?
Yeah, nothing too fancy right now. This week's pretty simple for me. I think that we, in general, are a little bit. I mean, it depends on the time frame, right? So I'm a swing trader, so in general, I'm more prone to sit on the sidelines at a time right now and wait for a really nice entry. So a lot of my work this weekend was kind of, I'll scan through all my charts and find what looks good, but then I'll really hone down and say, okay, well, where do I want to buy this? So a lot of my work this weekend was setting a ton of alarms. So I'm sure I'll have stuff going off as it trades back into support, levels that they've kind of gapped above that I can't quite chase into, a lot of these energy stocks like that. So I'm looking for some kind of safer place to manage risk from. In general, though, I think we have a little bit more push down, and then once we reclaim some levels, then we'll really get cooking.
Yeah.
So really quick, what I'm watching is, since we have filled the gap on SPY, the next kind of level down for me is rising weekly support level that I have right around 573.50-ish, 573-ish we can call it, and then we can kind of consider that almost like a mattress top, like a cushion levels of support down to 570-ish, let's call it.
So we're right there.
Yeah. So I'm just watching for whether we can kind of hold that previous low from November right around there, or if we need to kind of sweep that out.
So one thing that's interesting, and I don't know if you're a big study nerd like I am, but if you are, I can find it. Where was it? Williams R and stochastics. Yeah. So we're getting close on both these. So there was a study done and published. Let me see if I can find the name for anyone who's interested. There it is. And I know we'll get into some of the day trading stuff soon. Nope, that's not what I wanted. Algorithmic based low frequency trading using stochastic and Williams are a case study on the US and Korean indices. Now, it's a long name, but essentially the study looked at a 10 period stochastic and a 10 period Williams R, and essentially just said if both of them are oversold. So for Williams percent R, it was under 80, and for stochastics, it was under 20. If both of those things occurred, and then you just bought the asset then, and then sold when it became overbought, that ended up having like a pretty sizable win rate, like a 75-80% win rate on the S&P 500. So I'm going to watch these. I think the study was done on closing values, so we would need to see a close with both of these indicators down where they are now, but they're both at that area. The last time that they were doing that, just get rid of all those for now. That was just to prove a point. Let's get rid of the 200 day. Last time that happened was actually right here. And you can track some of these, right? This is obviously not a good exhaustive study, but if you look at some of those, that was one time where both of them were oversold. And then we didn't have anything until right here. Then you had a couple day bounce. And then right now we're seeing the same thing occurring right here as well. So that's just something that I was very interested in, just because it was such a good win rate, and it was such a simple strategy of just using these two settings. So that one wouldn't have counted. Using these two settings to try to make sure that things were lining up in a way that you're not getting faked out by using a single indicator. That's why they put the two indicators. They found it really cranked up the win rate. So we're right there now. So there are some good signs that we could be looking to bounce, but we need to see that in price action, right? At the end of the day, price action is absolutely everything. So for me, I'm with you. We got to see, there's some areas, I know some trend lines and everything below us, but for me, until we can see some strength and starting to look like we're going to re-challenge that 580, that's going to kind of be where I chill out. So the reason, right, we want to take a look back, even though we're doing a lot of day trading and short-term swing trading, the reason we want to look at these sectors, look at these industries and do all that is for whatever scan we do, for whatever system that we have for trading, we want to make sure that we understand that we're going with the flow of the overall market. If you have a penny stock or a low float stock that's gapping up, it will have an easier time breaking out and moving higher if the overall market is doing nothing or moving higher itself. If it looks like the market's going to sell off a little bit, which, you know, the retest of this support or this, the retest of the support from below, and then the failure has me a little bit worried that we're not going to challenge this at all today, then you maybe want to gravitate to the short side. So if you are looking at stuff, which I know a lot of people, we've got some names here as well. There's XXII, I know, for example, had some news today, and that thing's was up pretty significant, down a little bit after that. But if you're going to trade something like this, right, it's going to be, if the market is selling, I think more inducive to looking to short something like this as opposed to looking to be long it. So that's why we do this, just in case anyone's wondering. Even though we're short-term traders, we look at these long-term charts. You got to know kind of what road you're on, right?
Absolutely. And another thing that I'd just like to show really quickly, let's see. Let me know if this is working. Can you see the share screen there?
Yep, I got you.
Perfect. So I just wanted to highlight Momentum really quickly, which is the ETF that tracks momentum. Shocking name there. You gotta love all these ETF products. But yeah.
I think they're amazing. I say this all the time. I could see a day soon where I exclusively, and I'm working on systems and models now, where I exclusively trade these ETFs, just because there is so many of them now that you can express pretty much any thesis that you want just by buying, right? Instead of, we were talking about this, I think last time you were on with the psychedelic sector. I could either try to pick which psychedelic stock is going to move, or I could just buy PSIL. I know I'm going to get less return than if I guessed the right one. But it kind of hedges me in case I don't get the right one. Then I still got something, right?
And it can be dart throwing in some of these sectors, right? I mean, I know I was trying to do some research on which winners in the weed scene there would be, if any, and that was like, oh man, I don't know. I just want to have a little bit of money in the sector for when it's ready to do its thing, So
so then you can just buy an MSOS and then walk away, right? Yes, it's gonna, the return's gonna be muted because it's gonna move a little less than if you pick the right one. But yeah, it's and I find, and this might just be, I don't know, self-fulfilling prophecy or whatever, I find the ETFs kind of move a little bit technically better because they're less responsive to news because they've got 20, 30, 50 stocks in them. So if you have a major news event, it just doesn't affect the index as much, so that they seem to trend a little bit better, in my opinion, right?
Yeah, no, absolutely. I can see that. You also have some funny mechanical stuff going on with certain of like the levered ETFs, which I won't get too in the weeds, but it's interesting when you're looking at stuff like boil and cold for the natural gas, like how ETF mechanics actually fuel some of these moves, which is probably neither here nor there for this conversation, but interesting stuff nonetheless. And just for this chart, all I really wanted to note is that we could very easily be flagging a lot of the top names are just kind of trading sideways, more or less. They got a little bit overbought. Now they're coming back into kind of a place where you can consider them, if they're what you're looking to invest in, they're not too overbought to kind of express that theory. So, I'm just really watching to see what kind of happens here. It seems like we are kind of breaking down, and, this is a weekly chart. We've got some room. I'd like to see some of these big, kind of leading names in the momentum space come back to, this kind of average volume that we've traded at, for the past, how long is that? Yeah, quite a significant amount of time, right? So this is an area where it would be logical to come revisit. If we look at the Qs, big round number 500, pretty similar. Oh, sorry, that's kind of chart gore there. But in general, I just think we need to pull back and basically kind of retest this high from the from last year. So that's sorry, I lost my train of thought a little bit. But yeah, just the names that are kind of appearing are stuff that is not your usual tech stuff. So stuff like silver names. Gold is also starting to shape up here. Along with that, we have other commodities. and then some healthcare finally. I was noticing healthcare on my scanners for the first time in a while, so I'm keeping an eye on
I
these
was
names.
too. Yeah, I was noticing that even if you look at XLV, right?
Mhm.
If you zoom out, yes, it's kind of relatively strong, and it's holding kind of a major level. So I'm looking more if we are going to see healthcare, then also again for the short term trades, are we going to see biotechs? So biotechs are
Mhm.
sitting on these lows; they haven't broken them yet. But if XBI or our biotech sector can kind of put in some legs, it might actually help some of these more kind of speculative type biotech kind of plays, right? Where
Absolutely.
um, yeah, so if we're looking to trade, these kind of crazy names out here, we can certainly do it. So let's actually just take a look at some of these gap ups, and let's just go through the charts. Some of them see post market gap up.
And while you're pulling those up, I just want to highlight another reason why biotech is on a lot of people's radars. There is a JPM conference starting today. Actually, it's the next 3 days, so that'll be something to watch for catalysts. There are going to be a lot of these that are going to go crazy, and I think the whole sector is very interesting. After you're done looking at whatever that is, BNTX is another one that might be up your alley. That's a very promising setup.
I'll take a look at that. Yeah, so this is SLRX. I'm just making a note of some of these. Try to fill the role of Mitch by trading them. I'm going to be mainly focusing on my algorithms, which again I spent a lot of time this weekend on. Still working on those, and that will be the way that I mostly look to play, which are again more second day plays. But so this is a merge, right? To merge with Decoy Pharmaceuticals. So I'm less interested in things like that. Mergers and acquisitions, they're generally not a lot of fun.
Yeah.
But something like PHIO, complete tumor clearance in 2 cancer patients. Well, that's just a good thing, right? So you look at something like PHIO, and right, if they're actually curing cancer out there, this is a very interesting chart. It looks like $4, right? We hit that 3 or 4 times and reverse from it. So maybe through 4 could be very interesting on this one. Would be a pretty simple kind of momentum play.
Yeah,
Hopefully we get the sale there.
the $5 level looks like it got banged in pre-market a while ago, a couple days ago. This thing has been shaken and baking the past couple weeks, so it's definitely got some room up to the 420-ish kind of range. I would say that's where the 200 days falling, and these can definitely blow by, but it seems like it's kind of pushing out of that base. That's an interesting one.
Yeah, even from 4 to 5, right? That'd be a pretty
Yeah.
good 4 to 5 on that. See, see if it holds, right? I'm just reading the headline, but yeah, promising results of second cohorts for ongoing clinical study. Again, curing cancer, good for you. What was the one that you mentioned? Sorry,
BNTX.
BNTX.
That is BioNTech, and that is more of a less of a real biotech chart. Honestly, I mean, obviously it is, but for me, this is like a longer term stage, like stage 1, stage 2 breakout kind of setup. That's really cooking a long term support level at sorry, it's pushing out of a demand zone around 125. Yeah, this one's it seems to me like it's tightening up for a push to around 150.
Wow, yeah, that's an interesting one.
Yeah, I just wanted to keep an eye on. I don't know how. I gave it a quick look, and I don't think it's quite a Wyckoff, but there's some of that kind of action going on for sure. Some kind of accumulation.
So here's another one with ATPC. And this one, it looks like news is to advance medical research training in Indonesia. And they did quarterly results. So again, just looking at the pre-market action here, we've got some support around 2, right? Came down to 2, hit that, came to 250 and then failed. So 2 to 250 is some interesting areas in that. Again, just taking some notes. I've got my pencil. Just looking to see kind of what's moving. This XXII, don't know what the news is, but so it's some sort of FDA reduced nicotine policy. Doesn't seem right? And anything that does this in the pre-market usually has me worried. Like that
Yeah.
big spike and then the absolute kind of dump after that. So personally, I wouldn't be too excited unless it really gets going in the morning, just because that feels like a lot of trapped retail when that happens. You know, the large institutions are not coming in and buying on that 15-minute candle as it's ripping. And
Yeah.
last time it did that, it was in this zone. It failed as well. This one's just kind of been an overall dog. With cigarettes, right? Those are starting to go out of style. I think with our generation, I don't see nearly as many of my parents' generations. I still see smokers. With our generation, I don't see nearly as many of those.
No, absolutely. I think you're onto that. The vice taxes is interesting, kind of seeing those shift to the newer generation. It was cool seeing it kind of play out over COVID with the energy drink stocks. Those names were going crazy with Celsius and everything else.
Yeah.
But you know, people always are gonna reach for something, you know, when times are tough. Hopefully not cigarettes, and this chart's kind of showing it. Honestly, anytime I would see a chart like this with two massive spikes up that just get sold off, I'm thinking, okay, I mean, if this was flipped the other direction, that'd be a double bottom. You know, I don't really want much to do with this. If anything, I'd be trading it short down to 5, maybe 4, honestly.
Well, that's kind of what I was thinking here. So we have, so that's just an anchored VWAP from the high. And quite often, right, this is something that you can play for a bit of a pre-market move where, so that's $7. So if you see it get there, and I'll just create an alert, I'll make it a 5-minute alert, and it looks like it's going to fail, then all of a sudden you can have, you know, a reversal from it. So I don't know what we trade the pool. The beauty of it is you can short anything. So, right, we don't need to worry about borrow stuff. So that's something that I'm going to keep an eye on at $7 just to see if we get there and we start to fail, then it might be one of those that kind of bleeds off just because, yeah, it's not really an interesting name, not really an interesting story too much. This GRR, I just wanted to click on because this is just crazy. I've seen this thing so many times just come through wild scans. I don't even know what they're saying this time. Where's that tab? There it is.
Whoa, what a mover! What a daily trade.
Yeah.
That's something. It's coming back into a really interesting area, though. I mean, these things.
Boost buyback program. So they're buying back $10 million. Yeah, $10 million worth of the company. The whole company is worth $250 million. So that's on a percentage basis, it's a pretty sizable buyback. But you're right, this thing doesn't really, right? It's just got this history. If you go back, right, spike and then crash and then spike and then crash and then, right. So anytime I see this kind of over and over again, is that could it change? Could we have a change of character where this thing's finally going? Yeah, but just this over and over and over again has that kind of idea. So what I would do personally is the same kind of thing, right? Let's look at this high right here. Let's anchor a VWAP that's sitting around 1826, and we'll just create an alert for it. Just see is that something that's going to get there and then fail? Maybe.
I do got to say, this is one of the most crime-filled charts. Man, somebody got so rich so many times playing this thing. It's very fun. That's a very
well.
fun
If you right, and you can always look. If you go and just look at the float, it's got 8 million shares in the entire float. So what could happen with this easy is you get some Discord room, some amount of a Furu or something who's got a whole group of followers. And he plows in, buys a bunch of shares. He tells all his buds, and then all of a sudden, away it goes. With 16% short float, I bet you that short float was a little higher. If we go, I know one thing Finviz does well is you can actually chart the short float GRR somehow. Cool. I forget how. Candle simple. Forget how to do this. I've done it before. I'll take a look. You make it big? No. Forget how to do it. I'll take a look later. But yeah, you can actually chart the short float over time, and it will show increases and decreases in short float. So because they just have that data. And I bet you this was very heavily shorted at one point, and that's kind of what was happening here.
That makes sense. And yeah, I'm sure, I mean, if I was a short, I'd sure be taking my chance to get out, as it was kind of what retail thought was distributing last week, a couple weeks ago, or sorry, accumulating, which ended up being distribution up at the $25 area. So yeah, that was running a little hot, so to speak, up from $5 in November. So understandable from the short perspective. Now it's starting to look potentially appealing if you're trying to play it long, I guess. But that's it's not a chart
it's actually the short float's actually been increasing here. So there's starting some people leaning in on it, which I don't think is the worst thing in the world. Let's go through a couple more gappers, then we'll look for some gap downs, see if there's anything that kind of, again, I love you can just hover over this and it will just show me.
It's so nice. That's really nifty, you gotta say.
Red Robin Gourmet Burgers.
Oh, it's the Burger Gang. Yeah, I know this stuff. This one moves nicely, actually.
11 days to cover. So that's very interesting. RRGB. So yeah, 11 days to cover. I love the days to cover number over the short float number, just because it shows how many days it would take for shorts to get out of their position. And that can sometimes, even if it has just a not super interesting short flow, which 15% I don't think is too crazy, that days to cover number can go, holy smokes, right? This is a big amount of movement that this thing is going on. So
Michael, you've played your fair of short squeezes, I can tell.
Yeah.
This is giving me flashbacks to the SPAC and VSPAC days. But I'm sure the setups have been there the whole time. Something's always squeezing. Man. We got 3 minutes to open here, so it's gonna be interesting to see if that push down is all we get, at least in the indices.
Yeah, that's that chat. All right, let's see if there's any interesting gap down with the last minute or so, anything crazy. When it comes to a gap down, for some reason, I need to see a pretty massive number. Like I like these 50% plus gap downs. I want to see something just obliterated. mRNA is actually one that I'm actually going to add to the gap down. Yeah, down 21% today. Right? If you go to this daily chart, just cannot catch a break. Just below everything that I see here. Is this all-time lows on this thing? Could be.
It's close. I mean, since it was on its way up through this level a billion years ago. Man, that's rough. Yeah, 36 was a big level for me, and I just got mad.
All right. So yeah, with 1 minute left to go, what I think I'm going to be watching right off the open is just the SPY. I think we got to focus on the market. We got to focus on this. What's going to happen right off the gate here? What's going to happen with this particular? Let's remove this 81 or 580 level, which was, let's just expand that out. So let's say these lows kind of right here. Right? Do we even try to retest those lows? I don't know. If we go to a 30-minute chart, yeah, we've got that kind of zone. Let's remove that as well, because I think that's going to be everything. It's going to set the tone for even some of the algorithm plays I do, even some of the more speculative plays that we went over, all that kind of stuff. I think it matters pretty significantly what's going on with
I'm with you there. A lot of my scanners are going to be popping up intraday, a lot of them off of flow, and so that's also an indicator in and of itself. If I'm getting a ton of these different setups that are all setting up, and some of these slap and ask on a big order, if that's happening in 10 different places in the market, that's a sign. If there's only 1 or 2 setups that come in while I'm on, and that's also a sign. Maybe the market needs another day to reset before money starts coming in force. I think we open here. Nice.
We are open.
One last fact to keep in mind is I believe close to 80% of stocks are trading under the 50-day right now. So pretty close to bottoming out, in terms of this relative strength.
Yeah, it's funny. You mentioned that. I did spend some of my weekend. I'm going to spend some more time this week doing some study on that. The data and the systems I have, I can look at the constituency RSI, like how many stocks are oversold and overbought or whatever. I think there may be something there for trading the indexes based off of just a general level of overbought and oversold. And you're right, we are reaching pretty dramatic oversold areas, not just on the overall market, which I went, that study and everything that I talked about before, but the actual kind of individual kind of names, right? A lot of them are very, very oversold. So
definitely. And it's Mag 7 rules the world, right? So until breadth can kind of widen out, that's why I'm really keen to watch for the market to kind of widen the breadth out and get some money coming into healthcare, biotech. Shoot, we'll see, and we'll see if energy can actually stick the landing. That'll be the real sign for me.
Yeah. So CEG actually just came as through one of my algos here from, let's just do this, looking at this anchored VWAP here.
And that's such a nifty tool. I'm gonna have to start using that more.
Yeah, highly recommend, if anyone hasn't, the book from Brian Shannon about it's maximize trading gains with anchored VWAP. This guy's been using anchored VWAP for ages and ages and ages, and it's been working for him. Like it's just he's one of the OGs when it comes to trading, for sure.
Oh, I know this guy. Yeah, this guy's great for sure. It's massive gains, massive returns. I remember watching some of his interviews. Very impressive. It works, right?
Yep. I don't even know if I'll be able to buy enough with the small account here. So 265 for a stop. Oh, market, and then stop is 265. Yeah, I could buy like 20 shares.
Send it.
All right, let's do it. Let's buy 20 shares of CEG. Just going to see if I can maybe bid down a little bit here. Yeah, so the idea, for those who are kind of wondering, the idea behind anchored VWAP is just that we all know the day trading VWAP, and the strategies and the ideas behind that are pretty simple, right? We're looking to own things that are above the VWAP and be short things that are below the VWAP, and it gives kind of this this way that hedge funds and everything pay their traders. The anchored VWAP is kind of the same idea, right? So what we're seeing here is the CEG average market participant, where they are from the last 2 days. So if you started to buy yesterday on that crazy move, you can see how well VWAP was respected when we had that crazy move on Friday. And now what we're doing is we're saying, okay, well, let's just continue that into today and see if there's an institution that's trying to fill off a multiple day VWAP. Well, then this level in theory should be important. And that's a lot of what this system is looking for. It's just looking for, again, pullbacks on names that were really strong as of the prior day, right? And you can see that this was definitely really strong yesterday. And the idea, right, if we can get a little pullback here, then that's kind of something that we should keep an eye on.
That's a fun back test, breakout back test on some. It's you can see how they use fundamental catalysts to kind of rapidly get these back tests. They had good earnings, but they announced they were buying some company, and then one day later they magically released the real numbers they're buying for, which are significantly cheaper. So then you get the massive push off of that. Pretty fun. Yeah, these guys are definitely leaders.
Exactly. Other than that, Yeti. I've got a Yeti mug right here.
Yeah, Yeti's in my it's somebody recommended to me for a long short trade. I have to look into the fundamentals of it, but it's on. I got to do some homework this year. Maybe I'm a Yeti bull. It's an interesting chart.
Yeah, chop on that
He's
guy.
Hanging out, right? Eventually, it's got to do something.
You would think.
Yeah, maybe. All right. I'm actually not getting very many triggers on my alerts here, which is kind of surprising. Things haven't. I think that we maybe want to flush a little bit more here. just kind of what these are looking like. I want to get that 500 test proper, you know. I want it in cash session here, so I know it's real. Don't lie. Man, how about ANF? It keeps looking so pretty at the end of the week, and then it's just getting bludgeoned.
Yes, I've been watching this. Whoa, yeah, I didn't see that candle, but yeah, it's looking for this to break out. On
as you can see on your screen, that's why I'm watching it right here too. It's a chance. That uptrend line wants to hold.
There's always a chance, that's for sure. But that's not. I don't know if that's something I'd want to take a bet there after a big move like this. That seems like it's got to be news driven, but there's nothing really.
I didn't find anything, but I didn't look very hard either. So
the net sales. So it's sales. There's 2 hours ago, Benzinga news deck. Abercrombie & Fitch increases Q4 next sales outlook. Oh, so it's an outlook thing to 7 to 8% from 5 to 7%. Seems like it should be a good thing, but that's why I don't trade off news, is because it looks like they're upping sales and the things falling apart.
I never fully feel like I understand fundamentals, but I understand liquidity polls, you know. So they got the sweep high. Now we'll see if they can sweep low. But that's a bummer. That was one of my favorite setups.
I think that's a more important thing to focus on anyway, right? Is what is the market actually doing versus what is, you know, a company or a news event kind of trying to tell you what they're doing. Those are going to be two completely different beasts. Yeah, there's a lot of things pulling back. This SNCY. Now, this is from kind of my big boy swing trading account. This is one thing that I've been watching, this SNCY. Airlines have just been insane.
Yeah.
This thing attempted to do a breakout a couple days ago, and now it's kind of pulled back here. So if it's able to hold this area, that's interesting. But yeah, the Jets ETF has just been one that's just been a monster.
I'm gonna add this to my list. I like that a lot. Yeah, crazy trade. I know Citrini is one of the few Twitter guys that I would pay attention to, and he was all over this since November. So kudos to him. It's a fun one for sure. Yeah, American Airlines, United, Delta, all just crazy moves. And it really shows when a sector is like really undervalued, like when it gets going and gets that volume, it can overshoot expectations. I know cruise lines are another area where it's just they just were so explosive and so consistent in their moves. It was very, very cool to see that kind of playing out in real time and building up these massive right walls of these cut patterns just in a few weeks. Pretty wild stuff.
Yeah, there's let's take a look at some of these kind of lower float ones that I made notes on here just to see what's going on with them. Where's those notes? There they are. PHIO. So this one, put on the pre-market. That was one that we were looking at through 4. I obviously didn't get that. Happened right before the market. Yeah, cracked through 4.
5. There it is.
Yeah, hit at 5. If I was a brave man, I'd be watching this on a shorter term chart at 5 just to see if it held. And if not, right, might be a shot to take at. And then AVPC. Nope. AIPC. ATPC. There, my handwriting is very bad. Yeah, this one looks like it's just falling apart here. So this one would have to get over XXII. We're hoping that rallies to 7 and then fails. Doesn't look like it's going to get near there. This one might just be kind of a choppy action.
Yeah, RGB looks like we're still heading down, so no rush to find. I'm not in any rush to buy anything quite yet. But watching Q's at 500.
Yeah, no, and then hamburgers selling off.
Oh no.
So, that's a shame.
You know, one chart that's still really strong and had a lot of flow going into Friday's Uber. So that's what I'm keeping on my focus list here. That looks like it's oh wow. Yeah, power sticks. I'd like a swing on this, but I wasn't sure that it was quite ready to bottom yet. Now the hour was starting to look like a cup and handle.
200 by sorry, 150. I'm looking at WBA. I'm just watching this one. It's from the systems, and what it's looking for is that it's got a pretty massive day yesterday and starting to sell off a little bit today.
Yeah, interesting look there. CVS looks pretty similar. It's coming back into that power candle that pumped it mid-December. So definitely an interesting area to watch.
So, and it's funny, I remember joking with this one when they kicked this out of, was this the one they kicked out of the Dow? Pretty sure it was fairly recently. And then it's usually when they bought them and usually when they top, right?
Yeah.
So yeah, this on the daily chart, this is interesting because it definitely broke out here as well. Right. So this is a pretty kind of clean support and resistance zone around the $11 mark, give or take. So we broke that Friday. We're coming back down today pretty dramatically. So it hit that kind of halfway point through yesterday's candle with pre-market on or off, and then that's the kind of area that we're looking for. Where, hey, if this area holds, then I think it's interesting.
Absolutely. Yeah, I really like these back test type looks, and it fits thematically with kind of at least with my kind of view on the market, which is some sideways to downwards action on SPY and Qs as the other sectors kind of play catch up here. So I kind of like it, honestly.
Interesting look. I think $11. I think we need to hold. Like I don't know. I'm an old school trader, so I like these psychological kind of levels and everything like that. We need to hold those zones. Now, again, because Mitch isn't here, it's just the two of us. I just wanted to let everyone know too. If you got any charts you want us to look at from a shorter term, longer term basis, anything like that, I do have the chat open. We're monitoring that closely, so make sure we're asking. Steph says already done for the day. It's time to go. Good job. That's the way to do it. If you can get that money early, don't stare at the screens.
No, those are the best. You get a snow day, 15 minutes of work. That's what we're all about. That's what it's about.
The amount of times that I have, and I know a lot of traders have done this, where you think you gotta keep going. I made X amount today. Let's really, really push it. And the amount of times that has given money back and the hurt that does psychologically more than anything can be really detrimental. So yeah, if you can take off on that one, then go ahead. Seeing defense. So KTOS
I love that name. Yeah,
is a defense name that just broke into all-time highs. No,
52-week highs for sure, though. Yeah, it's crazy. So I love that you brought it up. Sorry.
No, I was just saying that's really interesting in this market. So you like this one?
I've been a big bull since I played this on the cup and handle breakout of 22-ish, if I recall. So I played this 22 to probably only like 26, I think. It's actually coming to my old crayons right now. It just tagged the 30 handle that I was looking for if I had held. It's a really fun company. Well, as fun as death machines can be, I suppose. It's a fascinating. I'm curious about your read on this, because to me, it's such a interesting way to grind up the right wall of a pattern like this. Like it feels like it's been accumulating wall moving up 20%, in like a year. I don't know how to feel about it.
Yeah, it's one of those. I love relative strength, right? That's all I can kind of hope for is relative strength. Should be it's one KTOS and anything that's showing relative strength like this is it's all I want, right? Especially, right? And I guess to explain to people what we mean by relative strength is just look at this chart, especially let's just zoom in over the last handful of days, right? We're up, we're at near highs, things are going well. It almost looks inverse to this chart, the S&P 500, right? And that's what I want to look for, because what it means is that when the institutions, are selling the market, they're not selling this. Not only are they not selling this, they're buying this. So
Right.
if the market stabilizes, if the market bounces, quite often what will happen, and there's tons and tons of academic research on this, what quite often will happen is the guys that are holding strong will bounce more. And the ones that are, and the other way around, if you own a stock and the whole market's ripping and your stock is not, that's a real bad warning sign, because we've all been through this. What will happen is the first down day on the market, your stock just lets go, right? It can't keep up with the market. So we want to make sure that we're focused on looking at, hey, what is the strongest stuff out there? What is the weakest stuff out there? Right now, this is one of those things where, again, KTOS, one of the strongest names out there, and that's why it just popped up on my screen. ESIL, so we have psychedelics still going well. Again, talking a little bit about my book here with some of that mind med that I bought, but again, this is what I like to do when the market is, as a relative strength trader and as a long-term trader, my job becomes really, really easy when the market sells. I kind of love when the market sells as much as it sucks for a lot.
I know. I'm with you. I'm that's why I'm in a good mood this week, even though I'm a little sleep deprived. This is the ideal for me.
Well, right. So last week I got stopped out of a lot of my swings, and most of them they were things I was in for a long time. I had nothing to do because I'm just trailing a stop. And it comes down, it tags a trailing stop. You book your profits, and then the market starts to sell, and you rub your hands and you go, okay.
Yeah, you start to feel real smart about your risk management, right?
Yeah, and you're like, oh, I've got a whole bunch of cash, right? I'm on Twitter. Everybody's mad because right, they're in positions and they didn't respect their mismanagement, and they're getting sold off. But I'm sitting in here in a whole bunch of cash. I can take time to work on my systems and my algos and all that stuff, and just wait for things to occur. And one of those things that I'm waiting to occur is what is going to be the strongest sectors, the strongest names, the strongest areas, and we can take a look at those. And like a lot of this stuff we talked about, like USO is still holding. Look, that candle hasn't budged today, even with the market down. We got wheat, we got XLE, we got energy, we got a lot of this stuff out here, so it's looking good.
Yeah, did you mention wheat, or am I just hearing what I'd like to hear?
No, wheat.
Corn.
Where is it? Yeah, corn. Right.
Corn with the power stick. That's a breakout on it. I know now I'm eyeing the the less desirable sibling, or however. Yeah, wheat just doesn't look as good, but it's not overextended like corn is now. So, short term at least. Let's see. I'm sorry, give me 1 minute to go let my cat out. He's not happy with me.
Sure thing. So while he's gone, right, we mentioned right off the bat, we got to watch the S&P 500. We got to see if we're going to retake yesterday's lows. If we do, that would be interesting as well. Because if we can retake this low, then great, right? That's what we're looking for. Right now, we're kind of just chopping around. If I put in the pre-market action, you can see we're stuck below pre-market highs. We're slightly above pre-market lows. The market hasn't
it's not much conviction yet, is what I would say. I'm sorry.
No, I was just saying you're 100% right. And same with, I don't know if you see it anywhere in the major indices, but I certainly don't. Seems like just chop fest for now.
I saw it for 1 minute, Michael, and that was it. Now it's faded, and it's not looking encouraging to me yet. I mean, it's like you said, there's nothing wrong with it. This could be all we need. I personally am a little bit partial to one more push down. That might be because I have a decent amount of cash settling tomorrow that I'd like to put to use. It's not ready to deploy today, so there's always those personal factors that I'm trying to keep in mind. In general, though, I think that it would be prudent to not be too fast on the trigger here. That's where I'm kind of at going into this week. And it's fun because I think I'll be here with you tomorrow too. So, if I'm gun shy today, maybe I'll be pulling the trigger more tomorrow if all goes as planned.
It does get a little bit hard, doesn't it, when you've got your own kind of constraints like that, right? You said you got some cash settling, so it's like
Mhm.
you're rooting for the market to sell off, but
Yeah.
kind of and kind of not, right? And it becomes hard where you're like, how much of this is and this is what I love about technical analysis, right? Is there's a lot of people out there who would kind of let that bias dictate what they're going to do. Like, if the market started rocketing, they're like, well, I've got this thing where I want the market to at least not go up. So I'm not gonna participate in that. But yeah, so it's one of those things that, right, we've got to make sure that we've got our plan. So for me, the S&P 500, it's got to break this. The only things that I've done so far today is I took some of that CEG around here, so I'm down a little bit on that, and the WBA as well, and I'm about flat on that. It's just those are the two things that came from my algo. The only thing that came from the system is Calm, CALM, which is just a
Ooh,
food.
eggs.
Tell me, yeah. So, but I looked at that. I'm like, that's just not. I don't even think that's worth the commissions or something on. It's just so unvolatile. This is the beauty of, again, what I'm doing is that I'm building these systems. I'm trading them with a very small trade the pool account, which I've been, full disclosure, has just not been going fantastic. But I've just constantly, like, I've got my iPad here and I'm just constantly taking notes, right? So I'm getting to see how these things are working and feeling in real time, and then make adjustments. And then when the show closes down, I'm going in saying, like, this kind of, I'm saying, yes, this is because it's searching for an unusually large candle. I'm saying, yes, it's technically an unusually large candle, but it's not enough, right? It's just not. So I'm one of the notes I wrote was need a larger range / larger volume, because I only want to trade these kind of second day plays and these pullback plays on things that the market really cares about. Because if it doesn't really care on day one, then it's really not going to care on day two, right? And that's a lot of what I'm trying to do, is either overextension on day two or looking for this pullback on day two. And like DBI just came through. Let's actually just add in some volume just so we can volume.
So would you be looking for maybe on your scanners to make some tweaks in terms of looking for stocks with higher ATRs, something like that, to kind of hone in on something? Okay.
Yeah. So what I'm doing a lot of, and to classify as like an interesting day, I'm saying this day has to be bigger than a lot of the days before it from open to close. So you can see DBI technically met that. If you look at a lot of the past days, it didn't move very much. And then it did have a good day and a decent amount of volume. But it's more like this day that I'm interested in, right?
Right.
Less about this. So that means what I do is I just go in the system and I kind of crank up the settings. I run my back test. I see how much of a degradation it happens, and then load them up the next day, come in, probably fail again, and then can then go from there. But that's one of the things that I love about trade the pool, is that, right, this account isn't going so well, but it's a small account. They're not very expensive. I can do things. I can experiment. I can blow up. I can do whatever, and it's not my money, right? It's paper trade.
Money trading.
Well, yeah, the way I look at it is that until I have my systems down, it is paper trading with a potential great upside, if that makes sense. Like, usually you paper trade, and even if you're killing it, there's nothing for you. At the end of the day, you got nothing. If I came in and my systems were great right off the bat, I started last Monday with them. If my systems were great off the bat, then great. I'd have a $20,000 account to play with. I could use that account to fund a bigger account and things like that. I came in right off the bat. The systems need a lot of tweaking, so that's fine, right? This account, I'll probably fail, and then by the next one, maybe they'll have gone through. So yeah, I look at it like that, as this is paper trading with, again, a potential awesome upside. If things go great, then great. If they go poorly, then right, it is what it is. But yeah, I'm totally fine with that outcome, because again, what I'm going for is I'm going for this potential. One of these days, I'm going to pass, hopefully, and I'm going to have a real great real great time with it because, again, I've done this all kind of systematically. So it's not that I came in, I got lucky on a couple trades and I hit a couple buttons and I passed. And that's, that's great. It's more of, right, I took the time, I took the energy, I tweaked the systems, I built the systems, I backtested the system. So my ability that I would feel to be able to do this would be way bigger, right? That I would be able to pass, I think is way larger. So
Absolutely. Man, I'm just looking over my scanners here and nothing has popped yet. They're pretty specific in what they target. But
yeah.
The three that the scanners did take on Friday are on screen, and of course we have X 7%. Those would have done amazingly. And Pen was the other one that triggered on, and that's up another 3%. So I like you're saying, it feels good that the system's working. I suppose I wish I was wish I was in those, but adds to the conviction. And we're getting some
a
nice
move now, right? Where we broke, SPY. We broke pre-market high. We're getting close to yesterday's low. I think that's going to be a big one. I may take just a shot on the SPY or in the ES on my big boy account if, right, we hit these lows, consolidate for a little bit, and then look like we're going to go. I think that might be an interesting place to take a pop. Looks like that cash may not settle for you, man. That's unfortunate.
That's funny. That was the other thing I checked. It actually did settle today, so we're cooking. We're cooking if need be.
Oh, sweet.
It's all coming together here. So
that's awesome.
I am starting to get kind of bullish, but I don't want to rush into this. On one of my indicators here, this is kind of the line in the sand, this 503 area on Qs. So getting a little bit of response here.
Yeah.
And I can really quickly walk through. This indicator isn't super complicated, but basically it paints supply zones and then ATR targets as well.
Okay.
So it'll often give you, ideally you will be trading something. Let me pull something else up that makes it a little clearer. You can go to a 15-minute chart. Would it like to load? There it goes. Okay. So you get a pullback into the bull supply zone. And so it's a rough thing and it repaints every day. But in general, usually you'll see a nice response there. And then you're looking, kind of builds in your places to get off there too, that just statistically, this is about what you can expect to look for on a day trade if you catch it at the right time there. So there are these breakpoints, kind of these pivots, and these are kind of what I'll be looking for in terms of if the move's real, so to speak, then it'll show me here. And if I start seeing some topping signals for the day, this is an area where I'll de-risk or potentially get out of trade too. So just something to keep an eye on for sure.
So like pivot points, right? Yeah,
it's Camarilla pivots combined with ATR and a few other things that honestly I can't remember right now. It's been a long time since this was whipped up here, but
gotcha.
Where's my cues? There are my cues. But just for my weekly roadmaps here, I will take off some of this chaos to make it clearer. Oops. But I think that we are still technically flagging out here. Let's put it on a 4-hour. Yeah, we're getting into pretty deeply oversold areas. I think that it could, kind of overshoot down here and take some of these lows. But in general, I think that we are relatively close to a kind of crescendo here. We have the psychological 500, which is always nice.
Yeah.
Yeah, and on SPY, this area is kind of like you're saying. I'm pretty sure this is pretty close to your zone that you're looking to reclaim.
Yeah, it's pretty much
off there. But we're kind of trading into longer term support here as well. The swing top on the daily is always an area of interest to watch. When you're kind of coming back into it. So I need to take some indicators off. These things are lagging. So basically this candle right here, we're seeing no response. So I don't know. A lot of interesting things to keep an eye on right now. We're fighting to reclaim this big old channel as well.
One of the things that's really hard to quantify, but I have seen it so much on Twitter is just how mad people are. I actually made a tweet and I think it got like 4,000 views, or I never trust that stuff on Twitter anyway, but, and it was just like, why is everyone so mad? The market's down 5%. And then of course people were mad, but it's true. It's like everyone was, oh my God, what a massive sell-off and all this kind of stuff. And then if you take a look, we're down just a little. It's no different from this. It's no different from this guy. It's no different from this guy.
Right.
We're down a little bit. So
Oh.
this is why you can hear us talk about it. And we're just marking these levels, right?
You're still showing my screen there. But yeah, absolutely. Don't want to slow your roll.
Yeah, I was just basically saying, hey, these all these sell-offs, they all happen. You're in a bull market. You're gonna have 5, 6, 7, 10% correction. It's just the way it's gonna happen.
Yeah, so somebody was talking about a move to like what were they saying? They were talking about a move basically to the 200 day or something, and how it would be indicative of like economic disaster. And I'm like, that sounds like just a healthy pullback to me. I don't know. I'd be loving that. So
yeah, no,
the despair indicator, so to speak. How upset are people right now? It's good to keep an eye on.
And yeah, it becomes really, really, as someone again who's a quant, it comes down to, I want to quantify things, and it's very hard to quantify. But when you go and you're scrolling Twitter a little bit on the weekends, I try to stay away from it as much as I can. But a little bit on the weekends, everyone's just prognosticating like massive recessions and all this and the end of the world. And I'm like, the market's down 5%, guys. Like, chill. It was down 5% in November, like 2 months ago, and then it was down right before then. In September, it was down 5%, and then in July, like this is just, it happens. Now, could this be a top? It absolutely could. Right? I'm not saying that, hey, you're just crazy if you're thinking the market's ever going to go down. It's what it does. It goes down every now and then, but I need to see some evidence. I need to see a bounce and then like a failure of that bounce, a lower high, something that says, hey, this is it, right? There's things that are happening here. And I'm just not yet seeing any of that. And then we've got like lots of strong names, like FTAI is one that I'm interested in here. Just insane. That KTOS that I talked about earlier. There's a lot of good.
Yeah, there's always money to be made in blowing things up. There's your aviation and KTOS. I think they do cool kits for RTX Sidewinder drones to make them or missiles to make them autonomous to some extent. Cool technology. But shoot, I completely lost my train of thought. Sorry to cut you off.
No, just and I was just saying, if it helps you, get it going again. It's just that, just everyone's freaking out, I think, a little bit too much.
Absolutely. I think that there's really nothing that much to worry about. But the nice thing to be in our position where we're not over leveraged, we're not yelling at our screen, is that we do have a bit of an edge in terms of seeing things a little clearer. And so it's nice to not be panicking when everything is burning. Well, I guess literally here in California, but.
You're in California. Again, I'm way up in Canada, so I have this extension on Twitter where I have all the news blocked. I have the For You AI stuff. I have everything blocked. So the amount of news I get is just so tiny. But you're far enough away from that you're all right.
Yeah, NorCal, luckily, but we're keeping tabs on it just because it's pretty wild. But I think you got the right algorithm there.
Yeah, no,
mostly it doesn't do much good for you.
Highly recommend. It's called Social Focus or something. I don't have the app on my phone. I have just go to the web browser, and then everything's blocked. Same with YouTube. All those like TikTok style videos, all gone. And it's like I have 2 kids, right? Doing this part time. I got my own thing I'm doing as well. Just no time for that kind of stuff. But quick look at the sector map and the sector heat map. What was really interesting to me is RSP positive. RSP is the equal weight S&P 500, and we're up on the day. So this is showing that the average large cap stock is actually doing okay. Right? The average large cap stock is up on the day, where the S&P 500 we're still down a fair amount. So this kind of showing me that there's a lot of names that are going up, and a lot of the big cap guys, they're actually the ones weighing us down, which is opposite of what we've seen for a while. Tesla, I guess, doing okay. Nvidia is the culprit, right?
Yeah.
That's down quite a bit.
And
And
really quickly, just I was curious about your perspective on this. So I was talking over the weekend about the weakness in chips. On Friday, they were. It seems like it was off of old news, the Biden stuff. That it shouldn't have been a surprise to anybody, I don't think. And yet the market kind of used this opportunity to say, oh, that fake breakout, it's not really happening.
mhm.
So I don't know. Do you kind of look at what do you look in retrospect at that news as kind of just a pressure release and kind of an indicator that maybe we have a ways to go down before we find real support again? Or how would you look at that? I'd say.
My belief, unless you're talking about when it comes to, like, again, these speculative guys that we went over, they've got some sort of FDA thing, or they've got
Right.
this or that going on. My idea when it comes to news, especially macro news, is that the market's just always looking for an excuse.
Yeah.
So, there are times where the market is too big on one side or the other. There's too many people in a position, and they're literally just looking for an excuse to buy it. They're looking for an excuse to sell it. That's why I always say that the CNBC will come on after the news day and say stocks were down because of this reason, and they never go, oh, right, this news thing came out, and of course stocks are down because of it, right? It never
Right.
happens that way. It's always the other way.
What's the old joke? Like, regardless of which way the market goes, they'll still blame the headline for it.
Right.
There's no correlation, but the market's always looking for that pressure release, like you're talking about. It makes, I don't know, for me, like my trading journey was like, there was a very clear inflection point where I was like, oh, I'm never going to be able to understand the fundamentals of the market at large better than the market participants, all the informed participants. So I can lean on, my strengths as a human, which is pattern recognition, right? And I can aggregate all this data that's available in the form of charts and just, figure out what the smart mind is doing. And I don't need to be the smartest guy in the room because trust me, Michael, I'm not, so
Yeah.
I'm not the smartest guy in this room. So
that's the entire
play to our strengths.
Yeah, the entire point of technical analysis, right, is that we cannot predict the future. We don't know all this stuff that a lot of people do. We don't have the the guys that we picked up from Harvard that are doing this or that or the other thing, right? We don't have those, but right, what we can do is we can see what's moving. We can see, like, what we talked about, the rotation into energy earlier in the day. Like, that's just happening, right? It's no one can doubt that USO is going up while semiconductors are moving lower and all of these things. So it's one of those ideas that, hey, we are very actively following the people who do know, or the people who will at least move the market, right? It's not that hedge fund that's buying USO necessarily knows that oil is going higher. They're making a bet like anything else.
Right.
But what we have the power to do as retail traders is we're small. So we can buy into something like a USO or an energy play, and we can ride that momentum as long as that hedge fund's coming in, and then we can get out. And it's the same when it comes to day trading, right? You're looking for these momentum type moves of other people coming to buy with you, and then you're looking to then have that more flexibility. If some of these companies with the PHIO, yeah, that thing's still going. This morning we were talking about these guys actually are curing cancer, right? So what's going to happen is you're going to have some institutional involvement. You're going to have some small cap guys that are large companies that trade small caps, and they're going to say, hey, this drug looks more promising. I'm going to then understand that I'm going to take that trade, and I'm going to start buying in, and they're going to have to do so in a respect that it's going to push the market one way or another. So all we're doing is we're just trying to get involved and stick around for as long as we think that they're moving this particular instrument. and then go from there. And good thing we didn't. We mentioned potentially shorting at 5, but right, good thing we didn't hit 5, then reverse. You got like a bucket of that, and then just ripping.
That's a ripper. Look at that. Yeah, and so this would be what you would consider this algorithmic buying at this point, where the order is on and they're filling every time it comes into what is ever determined fair value for the current range, right? So
yeah, and
there
like,
you go. Perfect.
Yeah, right. You pop the VWAP on there and you go, yeah, there is some institution that has actually understands what this phase 1 trial of the study is and what it's going to do. And they're saying, okay, we need to buy some shares.
Right.
They hit a button, they look to buy some shares, and it's all done algorithmically. There's not a guy actually filling orders on the floor in and out anymore. It just doesn't happen, right? It's not the way that it works.
Really quick, Michael, I'm just noticing something not super common, not crazy rare either, but just on the book map here, we have a lot of staggered liquidity down here on spot or on cues. And this is kind of leaning into my bigger bias, which is that I think we are headed downtown to 2,500. I think that is a very, very high volume node, and it also coincides with where I'd be looking for in terms of like average daily range, average true range, whatever you call it. So there's a lot of reasons why I'd like to head that way. I don't actually have the program installed. This is a I need to get it installed so I can expand for you guys. I can't quite see how fat this 2050 is, but on my volume profile on my other charts, it's quite significant. So we're going to keep an eye on this. In general, this kind of helps inform my bias and make me think that we're going to want to kind of sweep down and take these levels out. So just something to keep an eye on.
So that red bar, that's a large order sitting there? Is that what?
Yeah. So this is kind of like a DOM, but you're seeing it in 3D. So we're seeing when this order went on the tape, and now we're seeing price kind of reacting to it.
Oh, okay. So the size of the bar is not how big the order is. It's when that order hit the tape.
Yeah, it's a heat map. It's a heat map. So that's why you're seeing like some go on and off here. For example, this went on while we were down here. Price surged up to it. Then it came off when it was filled. So then in retrospect, we can say, okay, this was a sell order. Basically, it was coming up to be filled. They saw it on the tape. Once it was filled, then we got an immediate sell down. So that's what we're thinking these are. We're thinking these are going to kind of accelerate it down, but we'll see. You know, there's always some aspect of we'll wait and find out how price does at these levels. But in general, you doing this a while, you kind of see these similarities. And this is kind of like if I was looking at flow and I saw the 10 strike and the 12.5 strike and the 15 strike all being loaded. It's kind of like it wants to ramp there. You know? So it's just that kind of thing to keep an eye on.
Well, so it's interesting, right? So we're getting this cues on the SPY. We broke pre-market high pretty substantially and then started to come in. On the cues here, we never got there. And look at the topping tails, right? Where this is why, again, we both me and you mentioned waiting, right? We got to see what happens here, especially at these prior lows, because people who are buying the momentum up through, that's twice that it on just a 5-minute chart that punctured that level, sellers came in, punctured that level, sellers came in. So now we need to see. This is why it's funny seeing this from day trading to swing trading to investment, all the way back to Charles Dow, who's kind of the godfather of technical analysis. Always said the closing price is the most important price. That is Taoism, that way back. So I would say if you're day trading, the closing of a 5-minute candle is super important. And if you're swing trading, the close of a daily candle is super important. If you're longer term, like position trading, the closing of a weekly candle is very, and then same with the monthly, where it stops you from getting wicked into and out of these positions, which is why for me, right, what I'm trying to do is build some systems to day trade the markets for the open, and then use my systems that I already use, where I mostly wait until after lunch or the close to enter my swing trades to let this insanity die down, which means sometimes I miss it, right? I'm looking to buy something at 10 and it just rips all day, and oh well, that's kind of part of it. But the amount of times it saves me from this craziness is wild. So again,
100%.
I think the trade becomes easy here, and I want to know what you think when it comes to if this lines up at all with any of that crazy bookmap
Oh,
stuff. I'm just
I mean,
marking these levels.
100%. I mean, I just use the book map as confluence. And so when we were up there, you know, and we were above the opening range or opening price, I was basically looking for, well, we just came up into a resistance. What's going to happen, right? What's going to happen? I would like to see more demand being put on the tape above. So we were seeing those bars coming in below. That was why I was so antsy, you know. That's why I was like, I don't know. We're running hot on, you know, day trading, you know, like day trading time frames, 1 minute, 5 minute. And I'm not seeing the demand saying, okay, bottom's in, flip it and rip it. Let's go, you know? So yeah, just hang out. You know, we still got time. Like if we're talking about closing price being so important, I'm a big guy about thinking about these weekly candles as they're forming. So right now, this is what I'd be looking for, pushing down. And I'd love to see the bottoming happening around Tuesday, Wednesday at the latest, so we can get a nice couple of days to push back up and form a wick on that weekly.
Yeah.
So yeah.
And that's one thing that I was always taught when I first got into trading way back in 2006 is that essentially what our job is we're trying to predict the next candle. And regardless of your time frame, if you're a scalper, you're trying to predict the next 1 minute, right? You're trying to buy, you're trying to sell a minute later. That's fine. If you're a investor, you're probably trying to pick the next month to, you know, maybe 6 month candle, that kind of thing. If you're a swing trader, you're trying to predict basically the next weekly candle, right? Can you be in and out of something for a couple of days? So yeah, what you're saying makes absolute sense where, yeah, we're looking for a push down. We're looking for that to kind of hold and then a move higher. So you're kind of envisioning what this weekly candle would look like and then looking to predict the next weekly candle. Because if we do end up with a weekly kind of hammer candle in this area, right, and we do reclaim these lows right here, well, then the next candle would most likely be a green one. So then you're able just to buy and then take your trade. So that's a really good piece of advice, I think, is for most traders is that, hey, yeah, you're trying to predict the next 5 minute, you're trying to predict the next 15 minute, the next daily. It doesn't matter what it is, whatever time frame you decide. But yeah, you're just trying to pick whatever that next candle is and kind of go from there.
No, I love it, and it's so true what you're saying about you got to figure out your trading style, and you got to figure out how your indicators align with that. So, for example, in terms of putting this kind of thing into practice, for me, what that often looks like is I'll take something like a linear regression chart, or you can use Bollinger Bands, something to kind of track how overbought or oversold you are in relation to the time frame. So for me in practice, that looks like looking at 1 hour and 4 hour charts for these kind of statistical anomalies where they're going outside of their normal trading range. So if, for example, I'm looking for a bottom wick to form on the weekly candle, and on my hourly and 4 hour chart, we're starting to get into pretty statistical anomaly levels of oversold. That's when I'm really licking my chops, because then I can catch a bottom wick on one of these hourly or week 4 hour charts, and that'll end up being those are when you get the snipes, where you're like, oh, we pinpointed where the market turned, and that's they're high risk low risk, high reward trades in general, which is I'm always trying to optimize for risk reward as opposed to percentage moves or any other kind of real.
Which you should, right? And this comes from the quant who does this kind of stuff, is that you can never ever predict in any meaningful way win rate. Win rate gets really, really hard to optimize for, right? So what you need to do is you need to create a system that is robust enough that it can survive bad win rates, right? That's the main goal, is to say, hey, I want to build a system in which it is going to survive if my win rate drops to 30%, right? Does the system still survive? And then if the system shows a 40% win rate, but it survives at a 30% win rate, great. Right?
Right, absolutely. It's not martingaling, but there's still a reason why martingale doesn't start with all this, or the majority of his money, right? You start small. Yeah. So it's I don't know. It's like today's price action, for example, like a lot of people would be probably reading into these wake ups and everything. For me, it's just It's in the box, like your screen shows, right? We got a box.
Mm-hmm.
Let's not overthink this too much. But I don't know. I'm surprised more of my alerts haven't been triggering, to be honest. That's something that's interesting to me, and kind of I might be reading too much into it, but I'm leaning into it, informing my bias that we have a little bit further down to go before all of these stocks that I'm watching reach, support levels as a basket.
Yeah. No, and I again, and there's nothing saying that we even have to break any of these one way or another, right? And we could just do nothing all day. But for me, it's do we break this upper range, and then do we get over what's 504 or something here on right there? So that's the area over that 504. Then I think things get really interesting. Under this, just not really caring one way or another on this individual one. And then same with a lot of the names that I talked about that I took, right? The CEG, it's down still a bit on. E or WBA, I'm flat on. Like, none of these positions are really doing anything one way or the other. So still no shorts to be had on any of the systems, but it's one of those things that I'm just going to keep an eye on. This calm is still printing and saying, "Hey, look at me. Maybe I'll do that for a hedge." But
the clam coin,
yeah,
that's interesting.
Why not? Right? The clam coin would be probably one of the most tame coins out there with all that. Yeah, we got Watch It Grow, who traded some PHIO and survived. It's good. How's that guy doing? Jeez, $8 now. And you scroll back into a big area, but it's been into a big area for a long time, right? And it's one of those. This is why for this short-term trading, I think news is important, but for long-term trading, I don't really care, because this is they're basically saying they're curing cancer, right? It's one of those. If it ends up being true, this is a huge multi-billion-dollar thing, right? It gets bought out a couple days later by a massive pharmaceutical company for 5-10 times the price, and it's a great trade. So it's very hard to sit in front of to short this, right? To say, hey, I'm going to short the cancer curing stock. But that's probably what's generating this rally. One thing I always like to look at, if we go to PHIO, is to try to look at float rotation, right? So what you do is you look. So it's got 150 million shares traded today, and the float's 500,000 shares. So what has happened is, right, if everyone's sitting in a room with this company, that's been passed around like 100, 200 times today. It's just crazy when you have
right there. Wow. Yeah.
So
if that kind of can indicate the like how much you should trust the trend, right? Because if the average person has just gotten in that past 24 hours or whatever, there's a lot of bag holders, and everybody's very willing to get out fast. All of the long term holders probably just sold to you, right?
Exactly. It's the entire company has switched hands a bunch of times, like hundreds of times. So this shows that this is kind of a real speculative move. And if you want to short something like that, you want to get in front of that, all the power to you. Just have a plan. I don't see any halts in it, which is amazing, right? This is one of those things you expect halt after halt after halt.
Could you argue that maybe is a sign of mastery in whoever's running this algo? I mean, because they're not overheating it too much, right? Like, they're able to just keep riding it here.
It could be. If I was going to trade this thing, which I absolutely will not, it would be these VWAP bounces, I think, are the moves. I think especially after this first one here, right? When you got the second VWAP bounce, you're like, okay, so there is a system in here somewhere that's playing VWAP. So if he comes and you kind of see the area, the beauty of that is that you can take the shot, you can move on, right? You can say, okay, this is where I'm going to get involved. If I'm right, great. If I'm not, fine. And you have more tight risk. The problem I have when something, right, it's gone from, it's almost doubled in just this period of time, is like where do you put a stop loss? How do you control that kind of risk? And if you're short, again, where do you put a stop loss? How do you control that kind of risk? You could use a Bollinger Band or something like that, but again, it gets very hard. And we had a good lesson here, so I'm gonna pick on you for this lesson.
I was
Right?
gonna bring
Remember,
it up. Yeah.
we were praising you. We were saying, "Good job, you made your money, you walked away, congratulations." And now you came down, right? And it's it sucks. I know it hurts. It's not fun. I guarantee you, we've all done it. It's more about just making sure that you're kind of understanding that that's what happened, right? Go kick some rocks, right? Get mad at yourself for a little bit, hit the gym, do something to blow off that steam, and then just move on, right? It's done. It's done. Write that down in your journal, put a sticky note on your screen, whatever it takes to say, hey, when I say I'm done for the day, I'm going to be done for the day, because you end up, if you stew on it too long, I think that's bad. And if you don't stew on it enough, I think that's also bad, right? You got to go, okay.
Right.
Yeah.
The proper stewing is essential. And you know how I know that she's going to learn from it, or he's going to learn from it? They're going to learn from it because they're instantly acknowledging their mistake. And they're even putting themselves out there publicly, like that's accountability. And so, and then what do we see? The very next post, 3 minutes later, over it, talking about the charts, back to business. I love it. No, yeah, absolutely. Yeah. And no more short entry before lower high. Wait for the chart to don't we're not heroes here. We're not fortune tellers. Just wait for the chart to show you what it's going to do. Right now it's up until otherwise noted.
A bounce and a failure or something like that. But yeah, you learn from the trade. Now, I would also say the trade's probably not as relevant as the you said you were done, right? And right, that's the time to physically remove yourself from the situation, right? That's the time to, okay, if you have to delete the app from your phone for the day, go ahead. You can reinstall it tomorrow if you want. Like, just everything. If you're in cash and you're done, then you just you go do something else, and you take the win again. And speaking from absolute experience of, I've done that a million times.
Right.
It was to the point where I remember at the hedge fund back when I actually could day trade, and I did it well. They would just hit the button on your computer. Right? The guy would just come out and just go, there you go, get out. Because what we did is we had loss from top targets, we basically called it. So what would happen is you would chart your equity curve and you'd put a moving average on it. Right? Every time you place a trade, you just go into Excel. You can do it very simple, and you would just over time chart, and then when it broke that moving average, you were done. So you basically said, right, or to make it simple, say you're risking $100 on a trade, you're up. You give yourself 3 losers in a row for a round number, and then you're done, regardless of whether that's your first 3 trades are losers or whether that's you're up a bunch and then you take 3, whatever it is. You just have when the ad equity curve changes, it's time to go. And it's more of just a mental thing, right? Just to say,
I was going to say, I love that you're highlighting this because it's so poignant, because you're highlighting it from the professional money management side, which is hard line. This is about statistics. This is about, like you're saying, you're tracking your equity curve and making sure that you're on the right side of it. Right. And the other thing is, like, we're talking about taking a walk and how important that is, like just resetting your mental. I mean, that's it is also mental. And you can see that's why on the professional side of it, like there's no margin for error in that capacity, because once emotions get involved, once you're not trading to your average, then it's kind of like all bets are off, and it's you gotta figure out how to stabilize, because that's not an option when you're trading with the size of money that funds are, So,
well, yeah, and I'll tell you that's why I'm a bad day trader, right? And that's why, and it's the other reason why I'm a good swing trader, is because I can take a lot of time to think about my trade before I take it, because I don't need to get in at the exact price, right? I can take that time and do it. When it comes to day trading, I just get so into my own emotions and everything, that I end up doing dumb stuff. And it just, it's one of those things. It's like, I can't have, I'm a late night snacker, so I just can't have a box of chocolate bars sitting in my thing. So it's one of those, a lot of people spend a lot of time trying to battle the, trying to fight and trying to battle your emotions, or you just change your situation, right? You change the way that you're looking at it. So instead of me saying, okay, I'm going to buy a bunch of chocolate bars and every day I'm going to just grit my teeth and not do it. I'm not going to eat them. I'm not going to eat them. I'm not going to eat. Instead of doing that, I'm just going to not, I'll buy one and then I'll come home and I'll probably eat that night and I'll be right. So that's why I meant like physically removing yourself. Like you hit the daily target, you slam the lid of the laptop, you leave it behind, you go somewhere else, you do something else. Physical environments too for trading can really help. If you have, this is where you work, that is where you don't work, that can help as well. Just get yourself out of the situation, and that could help that whole kind of mindset of just something else. And again, saying this partly for you and then partly for me as well, because I'm making this journey back into day trading, and I'm doing it in a way that I'm trying to be very, very systematic about everything, which is why I'm building these. I'm spending probably double the time I am actually trading, building these systems, because I want to, I know what my limitations are, right? I know what my problems are, right? I know that if I just trade for the sake of trading, even though I'm really good at the analysis part, I know I'm not going to do too well.
Yeah.
Right. So I have to be able to do that other side. Right.
No, I 100% agree. I'm the same way, where I think when you have these kind of technically oriented, brains, like where we are trying to quantify everything, I'm definitely not at your level in terms of, understanding what's going on, but the urge, the tendency is definitely there. So it's, I don't know, it's very, it helps me think that I am on the right path. I've been doing this about 4 or 5 years now, in various degrees, but there's just always so much to learn. But it seems like the people who know what they're doing, they're all saying the same thing in this regard. It really is a mental game and learning about yourself and how to kind of overcome.
Yeah.
And I think that's why it draws so many people to it, right? It's kind of like the hero's journey. It's you against yourself, which is the ultimate challenge.
Yeah, and it is like, it is. I would say 100%. That problem, right? Because I could sit there and I can analyze charts all day and do fairly well with, predicting levels that are going to be important and all that kind of stuff. But I just know, again, intraday, just coming up with the ability to act and execution and all that, I just know I'm bad at it, right? I've tried enough, I've lost enough money trying different ways. And again, it's one of the reasons why I really love what Trade the Pool is doing, and why I decided to kind of come here as well to enter this very short-term trading journey, is because I know, again, like I mentioned, that account that I got last week is probably getting blown, right? It's just, the algos are not doing as much of what I expected, but I'm not blowing my own money, right? I'm not down $1,000 of my own money, right? It's that paper trading, and then I can work on these systems until I have them kind of down packed, and I know, right? And then also the recording of it is very interesting, right? To be able to see, it's one thing to run these back tests and to look at them on paper, but when it actually comes into seeing what they're doing and how it feels to actually trade them, you learn so much about them, right? So
Absolutely.
this just go right down to the bottom of the box, on the cues, and then just rip. Just so one of these, I would bet, is going to break at some point today.
I mean, rubber band theory, right? Like you can only stretch levels so many times before it snaps.
Yeah. Well, yeah, and volatility is mean reverting. So at some point we're bouncing, or at some point we're tanking, or this kind of has to happen. But it's one of those where, until then, names like, the only name that I've seen people mention a lot that they're doing good on is this PHIO.
Yeah, that's a trend, all right. No doubt about that one.
Yeah, you have to. This is the kind of stuff you have to play. right? When the market's doing nothing. This is why I'll never get people who are they'll say like, I'm an Nvidia trader, and that's what I trade. It's like, well, why? And they pick a single stock or a single instrument or a single, I trade gold or I trade this, and it doesn't make sense to me, because some days those are all going to do phenomenally, and some days those are going to do horribly. And how do you determine which day that is, and why trade something that's trendless like this when you can find something that is trending? And speaking of, we could just go in here and try to figure out something that's ripping or something that's tanking, and you can find them. The question is, and there's the PHIO is going to be at the top of this list. Sage Therapeutics, yeah, a lot of biopharmas, and you'll notice when they're all kind of biopharmas, then you'll notice something. TPET is petroleum.
This is really cool chart. I love that. So that's adjusting in real time there.
Yeah. So this is trade.
Awesome.
This is trade ideas. This is so what it's doing is it's just showing this is the one that's moving the most right here and there, right here and now, and then this is the one that is down the most.
Very
right.
Cool.
And yeah, you can just kind of click through these and see if there's any of these charts, like INOQ is tanking. I don't think that really surprises anyone. Those poor quantum computers all got wrecked. And yeah, so the idea is that you can click through this and you can try to find things that are trending, and that will make your life a little bit easier. VRME, this one's interesting looking.
And Michael, it's interesting. I'm going through all my focus list here, and nothing is moving like you're saying. But I'm kind of excited. My stocks are tightening up here. So I'm just sitting. I'm sitting in the pocket, waiting for them to come down into these 1 hour, these 4 hour. When they're oversold on that kind of level, that's when I'll be ready, because I'm sitting here watching other people make money on. I don't want to say pump and dumps. Maybe they're curing cancer. Hopefully.
Yeah. I don't know if I trust it too much, but hopefully, yeah. The XLE is continuing to rip here, like this candle. Even if we turn off pre-market action, it opened right near the low and just going. So huge level on XLE that is bouncing. XOP, which is our they're the guys who get the gas out of the ground. Right, they do oil and gas exploration. They're not the commodity itself. They're doing fantastic. A massive rip here. So this move into commodities, we are continuing to see. UNG even still up a little bit, holding, thankfully. Yeah, I mentioned with you guys, I've got a big natural gas position from like 17. So I'm hoping this breaks and we get into the 20s. But yeah, it's exactly what we said this morning, where if you take a look at the heat map, a lot of this is just very commodity driven, very oil, gas, wheat, metals, that type of thing. Very little when it comes to the fun stuff, right? Semiconductors and AI and ARC and all of that.
Hey, Michael, I don't know. Corn is trending. We got we got some fun stuff. I'm a steel trader, but that's how actually I got into trading.
Oh yeah,
steel, believe it or not. So.
Well, the SLX ETF's up a bit today. Looks like a bottom's going on here as well.
Yeah, it's I mean, X is having a heck of a day. I think it's probably headline related. I'm not actually sure why it is, but they're definitely leading the pack there. Nice stick. But yeah, DBA, I believe. Is it DBA or DBC? One of those is
DBC. Yeah, that's the
DBC.
commodity.
Yeah,
commodity
there
ETF,
you go.
yeah.
That one's setting up nicely on the weekly and monthly.
Yeah, if you zoom out on this one, just been
Look at that.
Just orderly channel pullback. Nothing crazy, nothing really worrisome. If it breaks out of this range or this channel, this could be it now. Right, without getting all macro speaking on a short-term trading show, we're seeing inflation in real time. Right, this is inflation. This is right. If this stuff rips, then inflation is back on. There's no way oil is gonna skyrocket. You're not going to see increase in gas prices, and you're not going to see all that kind of stuff. So that's one thing that we kind of have to worry about a little bit. If because if this stuff starts moving, then that could just be Jay Powell coming out and saying, not planning on lowering rates, not planning on this or that and the other thing. So we do have a question. Let's take a look. So someone's asking about yin. Let's take a look at yin. That's the 3x. So I don't like analyzing the leverage ETFs. Personally, the reason for that is they degrade over time, right? This thing, you can always just take one of these, always a funny experiment to zoom out. This one's not too bad, but some of these, what is it? LBAU? Is that the
Labu? Yeah, poor biotech investors. Biotech bulls are having a tough time.
Yeah, like this thing has never been a $3,000 stock, right? What happens?
No, of course not.
What happens with these is that they use options, they use futures to leverage positions up, and then those degrade over time. So they have to rebalance. So this is a feature, not a bug, that these things always eventually go down to zero, and then they have to do a reverse split and over and over and over. It's
right. They're mechanically destined to fail.
Yes,
it's important to know before you hold it.
Yeah, and it doesn't necessarily mean it's a bad thing. That's just how they're designed. So I'll do the analysis, because the same thing will happen on the FXI. You could do KWeb, and then if you like FXI or KWeb, then you can trade yin, as long as you are planning on holding it for a very short period of time, right?
And speaking of FXI, I've been watching it pretty closely because I'm a massive China bull, and I'm just a glutton for punishment. I can't get enough. So I am. Long term, I'm very bullish on China. When it happens, it's tough, but I'm watching the 200-day. It's rising. There's confluence there, and the major gap, the breakout gap, that is where I would like to see it kind of come back down and heal.
Yeah.
Pull that up a little bigger. Ignore the sloppy flag. That was wishful thinking. That did not pan out very well. But what I think is more important is that we're getting into a pretty key fib retracement area. We're in this golden arches, golden pocket. We have the rising 200-day. We have this big gap. And everybody's going to get skinned on something that's been trading down for forever. When it first pops, it's not going to stick the move very often. It'll have to retrace pretty significantly. There's going to be a lot of shake and bake between these long-term investors who are saying, oh, thank God I'm finally green, and then everybody else is trying to FOMO in and everything. So I'm really, for me, it's kind of ping pong between this falling 200-week moving average. That's definitely winning still, but I think we are looking constructive overall, and this pincer action between this rising 200-day will be kind of where you should be really looking for the catch, around 28 on FXI. For me personally, that's where I start getting interested. I don't know what it's set there.
No, I think that makes sense, right? Your RSI is getting a little bit oversold. All the caveats with China that I like to give. I always treat China like it's a biotech stock, because you get these massive gaps one way or another overnight, and all the trading happens while we're sleeping. So that's why you have a chart that looks like this. It's not really doing anything, right? During the day, you get these little tiny candles, and then you get these just massive gaps overnight. So just obviously be careful like that. It's not going to do much while you're awake. It's going to do a whole lot while you're sleeping. You're going to wake up the next day, open your broker, and go, oh, right. I'm either a genius or an idiot. So just size yourself accordingly. And I'm with you as well. Right. We got the 200-day moving average we're coming down to. I think that's going to be of major import. It was a problem here for a while. I like it. I like anything that does a massive, like nearly a double, right? 25 to 40, right?
Yeah,
nearly a double. And then a pullback, right? I like that. Just like you're seeing with what I'm trying to do with these algorithms, right? I'm not trying to trade them on day one. I'm trying to trade them on day two. And part of my reasoning for that, whether it's right or whether it's wrong, and we'll see after probably another couple blown accounts. But the idea is that you have everybody in the world who's very interested on day one. Not a lot of people with the patience to wait until that second move. But one of my trading mentors always used to teach me, it's the second mouse that gets the cheese, right? The guy who's trading PHIO on day one, he doesn't have a lot of levels to go off of. Doesn't have a lot of, because this thing's just going. You're trying to scalp it intraday. Day two, right? We have some levels established, right? We can take it if it comes kind of halfway down to the middle of the range. There's overextension things that we can do. We can do certain things when it comes to trading. So FXI, I look at it as not just like a second day play anymore. It's like a second month play, right? It had a massive month. And yeah, so I'm very much pro, looking for the, what happens next. Timing it is going to be a problem. So for what I'm going to do is I'm not going to try to, right? I'm going to wait until an ignition candle, right? So just like what happened here, you had this big move and you go, oh man, that made a big move. I missed it. But then you had all of the second move. I think it's going to be the same way.
Yeah, and one thing that I do want to touch on here that I think is super important, and it kind of will tie what we've been talking about for the past 20 minutes or so in a nice little neat bow. I think that it's really important to watch regime changes, especially going into inauguration, because what we are seeing and what we will be seeing for the next 3 months or so is going to be the market kind of in real time pricing in the projected effects of a Trump presidency, which is going to be pretty wild and hard to price in. So there's going to be a lot of repricing going on. And what are we seeing right now? We're talking about the metals index. What is that? That's inflation, you were saying. Oil as well. It's a very, very high correlation to inflation, right? So when we're seeing China trade down and oils potentially trade up and break out, we got to kind of be mindful of these being probably parts of the same trade, which is, if Trump really does do this crazy tariff stuff that he's talking about, that will be a big driver of inflation too, right? Correct me if I'm wrong, but
absolutely,
so these are definitely kind of thematic things to keep in mind. And I mean, if you pull up DJT too, there's another one where it's setting up for a big move, and oh well, there you go. Breakout. It looks like I missed this one. I had alert set for a little bit low, a little bit lower, but
yeah.
How many times is it going to reload off that 200, right?
Right. And yeah, this is another one that it totally okay to trade if you're taking bets on things. I'd also treat this like a biotech stock, right? Where this thing could be $70 tomorrow and no one would be shocked, and this thing could be $10 tomorrow and no one would be shocked, right? It's understanding the move in them, and you're right. I think very much, I'd say his first couple speeches are going to be very important when he actually, all right, I no longer have to be out there talking smack because I'm in, I've gotten all the seats that I wanted and everything's secured. Again, I'm talking as a Canadian who doesn't understand your guys' stuff at all, but it's like, okay, we're actually doing policy now. What is the actual policy that we're going to do? And that's is it the 20th? Did I hear that somewhere that's his official start day?
So then that'll be over the weekend. I think it's, oh shoot, now I should double check or it's been misinfo. But yeah, basically that 20th is the 20 handle, so to speak, is when we're starting to, I mean, I'm expecting this, which is a ramp up into it, right? As people kind of front run that. But I think that just over the next 3 months, this next quarter is when we'll start to see the fears of the market kind of expressed, and whether they're actually, quote unquote real, so to speak. We'll see if he tones down the populist rhetoric and the kind of expansionist, we're going to take Greenland, we're going to take these shipping routes, that kind of thing. Like you said, the tone of the first couple, first couple big talks there, I think will definitely be important to monitor and see how the market responds to it. The bond market is another thing I'll be watching in that regard.
Absolutely. Yeah. I think it's the, how much of the cabinet gets confirmed and all that kind of stuff. How easy is it going to be to do the things that he wants to do? And then, I think the world does kind of hang on tariffs. I think the market for the longest time was just pricing in that being just a bit of bluster, a bit of,
which it should be, right? But we're living in interesting times.
Yeah. So it's one of those that if it's not that, then things are going to get, I think, really priced one way. And then if it is, then I think we get swings in the other direction. So yeah, I think it's oil. Like Steph just said, Canadian oil, right? As I can tell you, again, I don't know anything about your guys or your guys' economy or anything like that, but I know ours, and we sell you guys wood and oil, and that's like 40% of our economy is just giving you guys or selling you guys natural resources. So things like that are really going to make a difference. I'm not again, I'm one that I'm not going to take bets on those because I don't think I have an edge there, right? I think one thing that traders always need to ask themselves over and over and over again is, where's my edge? And for me, it's the long-term analysis and the systems building. So if oil is going to continue, I'm not really going to care why, right? I like oil that it broke out of this giant base that I showed you guys this morning and that it's holding. So now I'm just looking to see if we can get through here. If we can, and we do some sort of consolidation or something like that, then I think that, yeah, that's then the trade to take. But until then, I'm just, right, I'm going to let the chart decide, because what's going to happen is, even in something as large as oil, if giant institutions are going to buy in, they're going to push the stock. And that's what we're looking for, is just the footprints in the sand, right? They're saying, okay, there is something going that way. Let's go that way with it. It could be one of these, like copper, like, oh, I don't want to buy futures data. There we go. COPX, because there is no copper ETF because they ruined it right before that had this massive move. And it could be the same kind of thing. You could take this same kind of trend line and draw it way back in copper back in the day. And then when copper finally broke, you had this massive move. You didn't have to be early here. You just had to be involved somewhere here, and then have an exit plan, a trailing stop, a moving average, something to say, okay, it's done. It's time to go.
Yeah, those 10s, those 20 moving averages, those 50s, if you're, a little bit, trying to catch a bigger move, but you got to have something, right?
And then even, and this is something you can do with TrendSpider, which I know is a partner of Trade the Pool, is you can do ATR based. So if you right click, you can just say, I want to do chandelier trailing stop. You can do that. Those are kind of interesting. Volatility trailing stops. And what it will do is you just set your volatility amount. So if I want, say I want to use a 3 ATR. So basically I just want to use a 3 ATR. If it breaks 3 times the average true range, that's where I want to exit. So what happens is it puts your stop right there. It says that's 3 times the average true range of this instrument. And then it just trails it up until you get clunked out. So little things like that, right? Especially when it comes to commodities that trend a lot, what you're going to do is you're going to get every now and then, you need to make sure that you're getting that really wide kind of trend, right?
No, absolutely. Sorry, I'm just watching in horror as ANF is down 20% now.
Ooh,
boy, that's brutal.
So that lower trend line did not hold, eh?
Yeah, I guess not. It's rough, man.
Yeah,
oh man.
Under.
So yeah, this is kind of I mean, that's what can you say? That's a sentiment smash right there.
Mm-hmm.
I have a friend who's really big in ANF. He was front running that breakout. Oh, that's
that's not good.
But hey, that's why we don't front run, right?
Right. No. Well, hopefully, right, a good stop under the 200-day moving average, right? The if we can get under the 200-day moving average, then that's great. If you got stopped out there, if not, right?
Yeah, those gaps under, those are rough. Yeah. You just think, well, it'll come and fill the gap, and I'll get out there.
No, that's nope. Hey, that's why you got to automate. You got to automate the hell out of this stuff, right? True. Is you put out your stop and you walk away.
And that's the thing. Like, I am somebody who's like full on tinfoil paranoid. Like, they're coming for my stops. Like, I think stops are, I think highs and lows on charts are just asking to be swept. But even then, I still respect my stops. And if anything, I'll just be looking for those longs where other people are getting stopped. But you got to respect them.
Absolutely.
You're paying them to keep you safe.
Yes,
for your security.
No, and that's 100% the. It's going to happen, and a lot of people, they then get mad. They say, "Okay, I got stopped out by a tick, and then the thing just ripped." And so this next time, I'm going to move my stop, and it's like that is the absolute wrong way to do it. Right? You can do an analysis, and you can say something like, hey, did I put my stop in an obvious place where everyone else put their stop? Should the next time, or should I change my system to adjust where I put my stop loss? All those are like valid questions, but I got stopped out, therefore I'm just going to move my stop next time if it gets closed, because what if it does it again? All of that. those things will kill you, right? The whole point of trading is that we're looking for that that left tail event, right? The random event where the thing just absolutely rockets for us and we weren't expecting it. And it's like those things will make your day, month, year.
Michael, we're about linear losses and parabolic wins, right?
Yes, exactly. Asymmetric risk reward. And yeah, a lot of people will do it the other way, right? Where they're looking at
me back in the day, my first year of trading, basically that to a T.
You're like, I got to get out because I've got some money. I got to get out because I get some money, as opposed to the other way, which is I got to stop out because I'm down money. And this one that I'm up money, I've got to walk away. I got to, like we mentioned, go for a walk in the woods, go to the gym, do whatever. Get away from all of that so that you can, you can do whatever it is that you want to do from there, right? So
right. It's about maximizing the time. It's maximizing your edge, right? So good traders, they don't waste energy on bad trades. They cut them and move on, and they focus on their winners, and they don't freak out when their winners win because they're a winner trader. They made a winning pick. The winner is winning. Let it win. It's actually pretty simple in some ways. It doesn't have to be super complicated.
Well, and again, this is a great comment, right? The size is one thing that can kill you, and that's 100% right. Where what happened with this account, and now I got to go with my tail between the legs and probably soon get another account, is I was just sizing far too large, right? I had that one mistake where I left things open overnight, and that really smacked me for a lot of it. But so when I go again, it will be with reduced size. I'm going to work a little bit more on the systems to, again, like we talked about, work on that asymmetric risk reward, try to get, way more when I'm right than I lose when I'm wrong. Things like that. That's going to be the focus, is that the size has to be interesting, especially when you're trading prop, which is a little bit different than trading with your own account, because your own account, you may be more comfortable with drawdowns. You may be more comfortable with certain styles of trading, but when you're trading with limits, when it comes to risk and everything, well, you have to treat those a little bit different. You got to go in and say, okay, I'm going to focus on, making sure that what I'm trading, I have that kind of control where I can size myself low enough that I can take multiple hits, way more than my system said, and not get killed. And that was the problem that I had here, is that I sized myself completely differently, where I was more looking for sizing myself as if my stops were going to get hit more rarely, I guess, than they did. And it could just be a bad run, but I just need to reduce that size because I need to be able to survive these drawdowns that happen. And the other thing is I didn't account for mistakes, right? Like that, leaving the stuff open overnight, right? So I got to change those as well. So we just got a couple minutes left here.
Really quick, just before you wrap up the show, I just wanted to say I just entered my very first trade of the week, of the day. It is pretty speculative, and so I'm sizing, like you're saying, I'm addressing my sizing appropriately. So FCX, so we were talking about copper, and this came up on my scanner. I've been watching it. There has been some nice flow on the FCX, if there's any options traders, the weekly 40 strikes. But just in general, what I'm looking at is this kind of reclaim level. To me, I think that as long as it holds this and bases out, it will be an asymmetrical risk reward for basically a push up into this 40 level here, where we're starting to get kind of resistance on the hourly chart. We came back down and we basically loaded up in this oversold territory. And like you're saying, there's relative strength on this chart, which is something I'm really looking for. It held this 200 moving average on the hourly. And so, yeah, it's responding correctly. I saw the flow come in, and I'm taking a little bit of a punt here. I am looking at the volume analysis too on the actual contract I'm trading and seeing where people are getting in on average on this. So I'm a little bit above the average that pushed it up. So I'm keeping that in mind, marking that level. And if it comes back down there and holds that initial level, then that's where I'll be adding. So that's the only trade I'm probably doing today.
Again, I love that breakdown, right? Because it's focused on it wasn't focused on I think this is going to go up, and this is the secret piece of information that I have that the rest of you guys don't. It is more, hey, I'm focused more on this is the kind of range that I see. This is the, the areas that I'm looking at. And again, your focus was, if I'm right, I'm getting out here. If I'm wrong, I'm getting out here. Right. And that's really at the end of the day what matters. And then like Steph mentioned, just size after that. You got to make sure that, and I'm sure, right, it's sized accordingly. If you end up taking that hit, again, you go kick rocks for a second, you're a little bit bummed, but you're not going to be outside your house holding a cup at that point, right?
I'll get a small coffee tomorrow. I'll figure it out,
Exactly.
All
right. Well, listen, thank you all for coming by, and Steve, I would greatly appreciate you stepping in while Mitch is away trying to get everything done. I hope everyone enjoyed kind of the first stream of just us. We had the boss away, so we were able to play a bit and nerd out on some charts. So I hope everyone enjoyed that. I hope you like this. Definitely, again, check out Trade the Pool. I'll be going back in there, getting more accounts as I figure out this thing, and we'll get these algos working, and then hopefully I can share some of that stuff with you guys as well here on the live stream. So thank you very much, Steve. That's all I can say. It was way more fun than if I was going to be sitting here ranting at a screen all by myself.
That was a good time. Thanks for having me on.
Awesome. Thank you.